passive income is a lie. Real estate investing can create what we call residual income. Real estate investing goals and setting the path to financial freedom. Hey guys, it's Phillip. I'm a full-time real estate entrepreneur with over 20 years experience in real estate. All I do every single day is buy, fix, and flip, buy, fix, furnish, and hold, and everything in between when it comes to real estate investing, coach, mentor, and I've been asked recently to speak all over the country on the topic of real estate investing and financial freedom. So real estate investing is a popular way to build wealth, but to be successful, you must have a clear goal and a clear understanding and be well-defined in that goal and that strategy and understanding, right? So whether you're a seasoned investor or you're just starting out, setting a realistic and achievable goal is the key to success in the real estate market. So here are some important factors to consider when you're setting up your real estate investing goals. First is the financial freedom side of that, right? The primary goal of a real estate investor is to achieve financial freedom and create what we call passive income. A passive income stream will eventually give you more income than you have expenses. My definition of financial freedom is exactly that. It's when your passive income, right, or your residual income from your real estate investments exceeds your monthly expenses. One of my mentors, I used to remember, he would call it cover your break evens. What is your bottom line break evens? So think about what are your monthly expenses and how much is it going to take to create more than your monthly expenses from residual income. One of my mentors currently says that passive income is a lie. Real estate investing can create what we call residual income. A lot of people look at it as passive income, right? But we still have to manage that asset. We have to manage the property management company, or if you're crazy like me, you have to manage the short-term rental. But this can be achieved by investing in rental properties and collecting monthly rent, which provides us a consistent, steady income. All right. The other decision we want to look at is what we want to focus on, whether we want to focus on short-term versus long-term. So it's important to determine whether you want to focus on short-term or long-term investments, right? So short-term investments might be a buy, fix, and flip. A long-term investment might be doing a long-term buy and hold rental property, or even doing short-term rentals, as in fully furnished short-term rentals with a property that you plan on holding long-term, right? So short-term means we're going to buy it, fix it, and flip it, usually within 6 to 12 months, right? Or even faster. But long-term means that we're going to buy that property and hold it for a year, 2, 3, 4, 5 years, and as far into the future as possible, making that more of a long-term investment. The third thing that you want to talk about and think about is your risk tolerance, right? So depending on where you are in your level of risk will determine what you want to do, right? So your real estate investments can range from low risk to high risk, and your risk tolerance will play a significant role in determining which types of investments are a best fit for you. If you're a conservative investor, you may want to focus on the low risk investments, such as long-term rental properties. If you're willing to take on more risks, then you want to consider investing in development projects or flipping properties quick, right? The thing with flipping properties is if you get caught in a downturn, right? Or I like to say the biggest expense for a real estate flipper is the vacancy cost, right? So if you're going to buy, fix, and flip, you have the vacancy cost from the time you purchase it to the time you renovate it, so the time you list it, so the time you end up with a buyer. That could take 6 to 9 months. And that whole time you have those holding costs and those expenses. Another thing it's really important to consider, and people usually say, what's the most important thing in real estate? And they say location, location, location. Well, it's true, guys. You want to buy properties in locations that are desirable locations. The investment is going to make sense, and factor that into your consideration, right? Properties in desirable areas such as great cities and city centers near major employers and in great school districts. Right now in today's market, you really want to make sure that your property is in a great school district, okay? And those tend to have a higher return, faster sales, and everything in between. It makes it a better investment for you. Another thing that we want to consider, the fifth step, is to consider having a great portfolio diversification. It's important to diversify our real estate portfolios to reduce the risk and to increase your potential for returns. I'm a full-time real estate entrepreneur. Like I said, I've been doing this business for 20 years. I do everything from buy, fix, and flip, right? So I do some of those high risk, short, quick in and out. I do wholesale properties from time to time where we find a great deal and we look and pass that on to another investor that's going to take it and buy, fix, and flip it, or buy and hold it. I do have some long-term rentals, right? Where we buy, fix, rent it long-term. And we do a lot of short-term rentals, buy, fix, furnish, put them on Airbnb, and do the short-term rentals with them as well. So I'm diversified in that sense. I like to buy properties in my local market in areas, and then with partners and joint venture partners with some of the clients that I coach in their local market, right? So I like to be boots on the ground, or have boots on the ground within a 15-20 mile radius of wherever the boots on the ground may be. Okay. So the sixth thing is we want to pay attention to is our return on investment. Your return on investment, or our ROI, is one of the most important factors to consider when setting your goals with real estate investing. Okay. The ROI is the amount of money that you can expect in return for your investment. A lot of people measure cash on cash return, right? So how much money do I have to put in? How much money am I going to get back? That's going to determine your cash on cash return. I like to look at my portfolio and think, hey, based on the equity position that I have, for example, how much is my ROI? Based on the value of the property, what is my ROI? Sometimes people like to hold on to houses that they've had for 10, 15, 20 years, free and clear houses. But then I like to look at what's the diminishing return on investment, because if you have an asset that's worth $250,000 and it's free and clear, and you're only renting that thing out for $1,500 a month, it might make sense to refinance, pull a lot of that equity off the table, or to even sell that property and exchange it into more properties and leverage that value and get a better return on your investment. So setting clear and realistic goals is the key to success in real estate. By considering the factors that we've talked about, such as your financial freedom, meaning that what is your monthly break evens, how much is your goal, to figure out how much money do you need coming in so you can quit your 9 to 5 if that's what you choose to do. What is your risk tolerance? What location will you choose to focus on? What can you do to diversify your portfolio? Different strategies, different areas, different types of properties. And what return on investment do you seek to get? Because a lot of times my private investors, they don't want to do all the work. Maybe they just want to invest. They want to put their money to work. They want to put their investment capital to work with somebody like me who can do all of the active for them, right? And they're happy with the 8, 10, 12% return, sometimes 15 to 20%. So if you're ready to get started in real estate, or take your real estate business to the next level, get coaching. Get somebody to mentor you, to help you, somebody that's already been there, done that, somebody that's ahead, that's where you're trying to reach and trying to go. Whether you've done 1 deal or 5 deals, or you're ready to take your business to the next level, it's cost you nothing to have a conversation with me. Let's see if we're a fit to work together. But until then, set some goals and go out there and start reaching for your goals, because I believe you too can get started in investing in real estate today. So don't wait. Go ahead and like, comment, and share this video so that anybody else that you think would get knowledge from this and would gain some experience and some encouragement to go out there and start doing it themselves, or they can reach out to me to have a conversation. Link in the comments, subscribe, and I'll catch you on the flip side.